Call it 2 to 3%, Scott. There's always going to be a little bit of frictional cash, but that's essentially all in. I heard what you just said, fourth negative week in a row. That's, on the surface a reason to buy, but obviously you need to have more than that. I see what's going on in Europe and Russia. The market knows that. I see what's going on with crude oil. The market knows that. Here's the thing about crude oil. Eventually, economic incentives kick in. Maybe the Crown Prince of Saudi Arabia doesn't want to meet with Joe Biden, but $100 plus barrel of oil, he's going to want to start selling oil. That's just the way it goes. You see oil below $100 in the next week or two, this market's going to rip. Put it another way, this market is one headline away from a rip higher. And yes, there could be headlines that move this market lower. Obviously, bad things could come out over the weekend, but it's more likely that things get better from here, not worse. And as the hostilities fade, Scott, and as we get that first rate hike next week from the Fed, what's going to become more clear is how strong the economy here in the U.S. Jobs are plentiful. You've got CapEx spending galore. And by the way, nobody talks about this. COVID, we're no longer talking about it. People are going to get back to work. Supply chains are going to ease. Yeah, I see the storm clouds. I also know what's coming after them, and I'm positioned for it. All right.
So then explain to me why Goldman today cut their GDP forecast, Jim. They say their recession odds now are as high as 35%. UMich consumer sentiment fell sharply. Recession-like numbers. Things are slowing.
Yep.
You paint a picture.
Yeah, they are slowing,
You paint
Scott.
like the prettiest picture I've ever seen. And part of what you say, Jim, is not true.
Not the prettiest picture you've ever seen. Not the prettiest picture you've ever seen. I acknowledge the hostilities. I see where oil is. I'm not blind to them. A recession, first off, define a recession. 2 quarters in a row of broad-based economic decline. We are going to slow down with oil where it is. There's no question where it is. But do you really think, and this is a rhetorical question, I'm not asking you, do you really think oil is going to be here 2 quarters from now?
Jim,
at this
we were
level?
slowing down.
I don't. And
we were slowing down before oil made its move. I don't understand where
Scott. Temporary. Look at all these factory announcements. What do you think is going to happen when Intel actually breaks ground on that $20 billion plant in Ohio? I will tell you, again, it's a rhetorical question. Earth movers are going to be out there moving earth. Trains are going to be running, delivering supplies. Energy is going to be used. People are going to be put to work. Finances are going to need to be arranged for general contractors building things. That's going to go on in Austin, Texas, where they're building semi-plants. It's going to go on in Michigan, where they're building battery factories. I could go on and on. This is before we even get to infrastructure, which is in the out years past this year in 23 and 24. I see the storm clouds. Look, I'm not naive. I'm not blind. But this is the time you're supposed to step in and buy.
I don't know. You seem like you're walking outside with shorts on. I don't know where the storm clouds are coming from.
I feel like, Scotty, Judge, I feel like this is deja vu. I feel like we did this last week. Jason was on with us. I remember this. I understand it's a week. To some people, that feels like it's a long time. For me, that's a blink of an eye. It's a blink of an eye.